Now, DoorDash stock, we mentioned jumping in overtime after the company reported beats on both the top and bottom lines and strong guidance. You can see there it's up a little more than 7%. I spoke with Tony Xu earlier about these numbers and what's fueling the growth.
Well, we're actually seeing customers increasingly come to the platform now, for use cases outside of restaurant delivery. And when you look at the number of customers that come into the industry that shop outside of restaurants, whether they shop for convenience items or grocery items or flowers or pet food or liquor or retail items, almost half of those new customers coming into the industry for the first time come to DoorDash first. A insignificant percentage actually now come to DoorDash, not for restaurant food as their first purchase with the platform. And certainly when we look at customer segments that have been with DoorDash for longer periods of time, or that have been higher users of the platform, we're just seeing greater frequency of cross-selling and cross-shopping behavior into all of these different categories. I think we're becoming a bigger part of a customer's journey and their daily lives. We perhaps once were a habit at the dinner table. Now we're becoming a habit for all of their other use cases.
What are you seeing in high-end versus lower-end restaurant habits?
We're seeing, over 3 years now, I would say, we've certainly seen the rise of inflation, both on commodity goods, whether it be grocery items or convenience goods. We've also seen that on input prices when it comes to the food that restaurants have to use to sell their product. And we've seen for certain segments, some trade down effect where they're purchasing fewer items, but actually still continuing the same number of purchases. And when you kind of add in the increased prices because of the inflation, as well as the reduced number of items, it kind of nets out to be a wash. But what we still see is customers are still looking for that treat, in addition to just feeding themselves or buying their deodorant or whatever daily necessities that they're looking to find. They still are looking for opportunities to celebrate, whether it's for Halloween, just what we celebrated here in the U.S. yesterday, or someone's birthday, or giving a gift to friends and family. And so we still see all of those occasions.
How aggressive are you going to be in building out the advertising business, particularly when it comes to grocery?
Well, our advertising business has grown tremendously quickly. Again, another business that did not exist even during when the pandemic, and something that we just started a couple of years ago. We're seeing best-in-class returns on ad spend for our advertisers, while also protecting the consumer experience. And that really is the name of the game of the advertising business. And, to us, building the best and the biggest advertising business is really about building the best and biggest marketplace business, because we understand that, it's really the engagement and the activity, the genuine connection between consumers and merchants that even allow us to build an ad business in the first place. Now, your question specifically with respect to ads and grocery, we've actually built, a grocery business largely from scratch, without really an ads business, because we kind of built them together at the same time. We certainly will be pushing in that direction more as we see greater relationships and deepening of relationships with CPG partners in particular. But at the same time, we don't believe that we need that funding source to build a standalone profitable grocery business.
I also asked him about the surge in profitability, at least EBITDA this quarter, and that's projected for Q4, and whether that's the new normal as DoorDash continues to invest.
2023 certainly was an inflection year for us. I mean, as you pointed out, looking at our P&L, our Q3 results on the bottom line in the quarter almost resembled the entirety of the profitability in 2022. And so what's happening there, are a few things. Number one, you have continued growth across all of our businesses. Even our U.S. restaurants business is growing at faster rates at bigger scale than a year before. You see that in all lines of business: international, new categories, our ads business, our B2B platform business. That's the first point. The continued growth and accelerated growth, I would argue, at higher rates of business lines that were already profitable or on that path. The second point is improved unit economics across the board in every line of business. And so when you multiply these two numbers together, you get a massive profit pool in which you can invest. But we've been pretty disciplined with those investments. I mean, if you look at the OpEx, the headcount has been roughly flat for 4.5 quarters now in a row, yet the revenue has grown by over 30% or around 30% in that same time period. So when you put all of that together, I think that's how you create the results that you saw. But we're always in investment mode. I mean, DoorDash is a business whose goal is to solve many problems, and certainly more problems in local economies, to make all of these physical businesses successful. We have a long road ahead to do that. But we're going to do it in efficient ways. I mean, and I think you saw the kind of scale benefits, certainly, of our platform, as well as the track record of disciplined execution in 2023, yielding some of the results that we're discussing right now. We, want to keep making those investments, and our goal is to build the biggest business that will maximize total profit dollars in the long run.